Well, hello, everyone. My name is Tony Hixon, coming to you from Hixon Zuercher Capital Management with April 2020 Market and Economic Update. Today, I am joined by our research analyst, Austin Wilson. Say hello.
Hello, everyone. Thanks for being here.
Thanks for being on the video today. I appreciate it. We're going to bring you some news and events that drove the markets throughout the month of April and ultimately what we're seeing on the road ahead. We are abiding by the government's stay-at-home order, so we're bringing you today's video via Zoom. So, Austin, let's chat briefly about the COVID cases. What are we seeing?
Sure, yeah. We've seen a lot of growth in cases. Here in the U.S., we now have over 250,000 cases with 6,000 deaths. Around the world, now cases have exceeded 1 million cases, over 50,000 deaths. So these are numbers we're watching very, very closely. These case counts are constantly changing, and they are moving the economy and the stock market for sure. So these are things we're watching over time. One thing you'll hear a lot about on TV and on the news is the curve. And something that is really prompting why we're recording remotely and working remotely and all of this stuff is flattening the curve. Well, in the US, in the red here on this chart, we can see that we really have not been the biggest proponent of the curve flattening. Our curve has actually increased very, very rapidly. A lot of that is due to increased testing over time, but we would like our cases growth day over day and week over week to slow over time, and that's something that we're working towards with the medical professionals in our country very, very quickly. Ideally, we want to see something happen like we see in the middle of the screen, where South Korea was really able to stem that off pretty quickly and have a flat curve. Hopefully, we can see that very soon.
Indeed. So by flattening the curve, they are basically telling everyone to stay at home, which is impacting companies' ability to make revenue and obviously earn profits. So how has it impacted our equity markets this year?
Not good. It was not good. So thus far, all three major U.S. indices are sharply down, and generally speaking, around that bear market territory mark, which is over 20% off of their recent all-time highs. And it was a very, very fast fall. So what we're experiencing right now is some very, very volatile times with ups and downs that are huge all the time.
Indeed. So the government is basically telling us to stay at home, which is preventing companies from earning revenue, and they're having to lay some people off and adjust their employment. What is the government? They're stepping in because they're forcing us to stay home. They're stepping in and providing some help to American citizens and American businesses. Can you explain a little bit about what those are?
Yeah, so recently the government passed a bill called the CARES Act, and it's really a coronavirus relief act for the economy, and that's totaled around $2 trillion. There are a ton of provisions in there, and if you would like details on those provisions, my colleague Josh and I recorded a podcast on our podcast, the Invested Dads podcast, available pretty much wherever you want to listen to it, really where we dig into the details of that bill. So if you want to know more, check that out. But at a very high level, there were provisions for individuals who are going to be receiving a lot of checks or electronic transfers very, very soon to hopefully help them buy during this tough time. There were unemployment changes, there were small business loans and stuff like that. So take a listen and check that out.
Cool. Yeah, I listened to it. It was a great podcast. Appreciate your work on that. All right. So what our clients are asking us right now is, what do we do from here? And really, there's a few things to think about. First off, I would encourage you to control your inner dialogue. Don't succumb to negative thinking. It's easy to lose hope as we continue to watch the news and the panic continues, death tolls rise. Just remember that the blessings in your life, and don't just look for them, name them. And that thankfulness and grateful attitude will help you with a positive mindset. From a financial standpoint, keep investing. Keep your 401k investments active, and also build up an emergency savings in case there are any job changes along the way. From a physical standpoint, I encourage you to eat healthy, stay active. It's easy to binge watch Netflix while eating snacks, but from a physical standpoint, it's always good to eat healthy and stay active along the way. And most importantly, be others focused. Build those relationships, even though we are forced to be staying at home. Connection through Zoom, cell phones, we can encourage those around us and not give up the human interaction standpoint. So those ideas were generated from the everyday advisor, Jessica Hinks, who is an advisor here at the firm, wrote a blog recently with those ideas. I encourage you to head on over there and check out and subscribe to that blog. for some really good and actionable content along the way. Also, in addition, we are hosting each week a virtual happy hour Thursdays at 4 p.m. It's a fun time where myself, Austin, and our Chief Investment Officer, Adam Zuercher, joins the call. We share all things COVID-19, markets, what's going on in the market, and what you can do about it. So if you'd like to subscribe, head on over to hzcapital.com/BMB, and you can subscribe there. On behalf of Austin, myself, and the rest of the HZ team, thank you for joining us today, and we'll see you next time.